Hey, Bulls and Bears, JJ here. You're watching Bull Boom Bear Bust, back with another dose of economic reality. And an amazing day on Wall Street, the stock market, all major indexes in the green today. The big winner today, the leader was the NASDAQ, up nearly 2%. The Dow Jones also up over 1%. That was a gain of 383 in the Dow. So where's all this confidence coming from when you see what happened with the banks last month? We know that the Fed is injecting liquidity into the banking system right now. They're calling it loans. They're making loans to banks, emergency loans. Supposedly, these banks are going to pay the Fed back. But here's the thing, the banks don't have any money. And you could say, well, they're just going to make the money somehow and then pay back these loans. Folks, they're not paying back these loans. The banks don't have the money. The money's gone. It's invested once you put it in there. The Fed is the supplier here, or the dealer. The U.S. government is also broke, $30+ trillion in debt. They print the money from the Fed to even fund the government. That's how ridiculous this whole thing is. But let's get into some other news here. I guess a little bit of good news. People say I don't often have good news, but I think this is good. New vehicle prices finally fell, and we saw a little bit of a pullback in used vehicles, but now finally used vehicle prices have fallen after about 2 years of steady gains without a single month of a decline, and that's according to Kelley Blue Book. Now, I think a lot of you agree that vehicles are way overvalued right now. I would have to see a 30 or 40% correction in prices before I would consider buying a new vehicle right now anyways. We're just seeing so many things just very slow to correct. You would think with a big rise in interest rates, with the banking debacle going on, that prices would have really corrected a lot more quickly and more fiercely. Fiercely, is that a word? Fiercely. Anyways, I think this could be the beginning of the decline. I mean, everything combined here, the interest rates, the state of the U.S. consumer with the savings of the consumer being the lowest in many decades, or about the lowest. It did bounce up a little bit here recently, I think, with maybe some tax returns, but it's the lowest in close to 40 years. Everything combined, the interest rates, the low savings, the job losses, the layoffs, the cost of living. We've got to see a correction at some point. Now, with the banks being more restrictive on their lending, there has to be a bigger correction. So we're going to keep an eye on this, and we'll see how this plays out with new and used vehicles. But maybe next month we'll tell a bigger story. This month wasn't a very big drop. In fact, per Kelley Blue Book here, it was a 1.1% decline in March compared to February, so which is barely noticeable, from $48,558 to the average used car down to $48,008. Not a very big correction, but could it be the start of something big? Possibly. I think so. Please let me know what you think down in comments. Next, let's talk about more closures, more store closures for Walmart. I first heard this on the cable news, the TV news, and they acted kind of surprised. Oh, what's going on? Walmart's closing down. I thought Walmart was always busy. And that's what people tell me. They tell me that the economy's fine because all these stores are busy. Well, here's what's going on. Walmart closes 4 Chicago stores as losses run in the millions of dollars. We told you we were going to see this, and especially in the bigger cities, the more congested areas where the higher crime is. But listen to this. These Walmart stores, the retailer said they have not been profitable since the stores were open nearly 17 years ago. Not profitable. What kind of retail operator, what kind of CEO allows this to happen under their watch? You're going to keep a store that's not profitable open for 17 years, in this case 4 stores. The Chicago stores, all the stores were not profitable in 17 years. This is out of Benzinga. It's also out of other outlets. Insane, right? Why do you keep stores open for 17 years? High theft is the reason they have not turned a profit, and they're just now closing them after 17 years. That's outrageous. It goes on to say here, the stores collectively have been losing tens of millions of dollars a year, and annual losses nearly doubled just in the past 5 years. What did we say was going to happen? Crime gets worse as the economy gets worse, as things get more expensive, homeless tents popping up everywhere, more stores closing, even stores like Walmart. Um, it's going to continue. We're going to see. I wouldn't be surprised if the rest of the stores in the Chicago area close down. What are the customers going to do that used to steal stuff from these stores? They're going to go to the other stores, and those other stores are not going to be profitable if that happens. And I think it's likely to happen. So we'll have to see how this plays out again. It's happening just like we predicted, more store closure. And we really haven't seen the eye of the storm yet. I mean, I think we're just at the beginning. Just wait until things play out like they're going to play out. And we're going to see a lot more stores close. Even Targets, I think we're going to see close because of the theft. The customers that went to one store, that store closed, they're going to go to a different store. Plus, the economy is getting worse. The debt's getting worse. Cost of living not improving very much. We did see a minor drop in the CPI, which they use to gauge inflation, which is really flawed and doesn't really get a lot of what people have to pay for. It doesn't really get the true picture of the cost of living, but it did drop from month to month. And that was one of the reasons why the stock market was so high today, or in the green today, is what they're saying. But a minor drop from month to month is in inflation. Does that outweigh or outshine the fact that we're still up year over year by a lot? I don't think it should, but apparently the stock market loved it. It's pretty insane and wild, but that's what they're telling us, is the reason. And also more on these Walmart closures. With these 4 stores losing money straight for 17 years, tens of millions of dollars, it said, combined, the prices that you're paying at other Walmarts are probably higher because of this. So they have to make up the profits, or they have to make up the losses somewhere in order to stay solvent. So ask yourself, how much cheaper would things be at other Walmarts that are still open if it weren't for these others that were losing money, so much money each year? I think things would be even cheaper. So that's another inflationary force. We're going to see stores having to raise their prices to make up for theft. And closing down stores is just one aspect of it. I think this is another inflationary force. When somebody gets something for free, somebody else is paying for it, right? And that's not just true in retail or at these stores. I think that's true in the broader economy. Sometimes on that particular issue, some people will disagree with me. They say, JJ, there's plenty of money to hand out. They can print it. It's not going to hurt you and me if they hand out money to somebody else. Well, think about this. What if half of the population of the country got $30,000 to buy a car? Just they cut a stimulus check and gave $30,000, but you didn't get the check. But you go to buy a car, and now the car that you wanted to buy has been bought because all these people got a check to buy a car. So obviously cars are going to be flying off the lot. You don't think that's going to raise the prices for cars if all these people got a stimulus check to go buy a car? Of course it is. So why would you think that money being handed out is not going to come back and affect you? And maybe you're so rich that you don't care, and that's a whole different topic. Maybe you don't care, but the fact that it has no effect, that's an insane argument to even try to bring up, that doesn't have any effect. All this money being created, printed, handed out, it has effects. It affects everyone that has to buy anything because it creates artificial demand, and that's one of the reasons why we see all these price bubbles in housing and vehicles, and everywhere you look, it's in a bubble because of all the money created, the money loaned out. Which is another way of creating money because the banks are creating money that they don't have, creating it out of thin air. I'm not just talking about the central bank. I'm talking about the bank that you go borrow money from, right? They don't have the money that they're loaning out, right? I think people are finally learning that. I got a lot of questions at the beginning of back when I first started doing videos a few years ago. But people are now finally starting to realize that. I see down in the comments, people are finally connecting the dots, and they see, oh, now we see why prices haven't corrected or crashed, like people thought they were going to crash. Next, the deficit. This is the national budget deficit, tops $1 trillion in the first 6 months of fiscal year 2023, which begins with last October. $1 trillion, folks, in 6 months. And here's something to think about. As a nation, we didn't get our first $1 trillion in debt until looks like the 70s, the early 70s. Remember, we came off the gold standard in 71. But after that, let me put up a chart here, the debt exploded upward after that. So it's no coincidence that we came off the gold standard in 1971. And then, just like it shows in the chart here, inflation skyrocketed to the moon after that. I mean, it continues to get worse and worse and worse. But yeah, we're supposed to believe that the economy is sound. What did the one of the Fed people came out and said a few weeks ago? The banking sector. They said the banking sector is sound and resilient. Okay, well, I guess borrowing so much money that you can never pay it back, that's sound and resilient. I guess if you were on a budget in your household and you borrowed more money than you can ever pay back, I guess, would you consider yourself sound and resilient in that case? Well, that's the country. The country's broke, basically. Next, more food destruction. 20,000 cattle. Another mysterious fire explosion. 20,000 cattle gone. So it's very unlikely we're going to see the cost of food go down very much, if at all. In fact, I wouldn't be surprised if it continued to go up higher because all these just destruction of our food supply is what it appears. Some people have theories about what it is. You get so many things happen all at once, and people start scratching their head and they start wondering, is there something going on out there that's not good? I can see why people would think that. Next, Fortune. Fortune says home prices just bottomed. So apparently that's all the price corrections we're going to see in real estate, and now prices are going to go back up, even though we have banks failing, and we have the Fed giving emergency loans, quote unquote loans to banks to keep the banks from failing. And but yet prices are bottoming for houses, and they're going to go back up according to Fortune. I'm not saying that. I think it's insane that they would say that. So are they trying to sucker people in at the top of this market because they know that we're headed into major correction territory in the housing market and this economy? I mean, we've seen that in the past. We've seen articles, denying that the reality is happening, but it's happening. I wouldn't be buying a house right now in my neck of the woods here, and in California, probably not even in the state, probably not in most states. I mean, maybe a few states in the Midwest, it's reasonable right now, and prices haven't went up that much, but I definitely wouldn't be buying in California. And what they're saying here out of this article here out of Fortune, the market stabilized around January, a combination of improved buyer confidence, tight supply, and slight declines in home prices and mortgage rates. So the buyers are confident now. What are they confident about? We already had the Treasury out there saying that we're not going to rescue, or they might not rescue, the regional and the smaller banks. So we're on the precipice of possibly hundreds of bank failures, but yet people are confident, right? Doesn't really add up to me, but hey, let me know. Maybe you're confident in this, but I think we've got a lot worse things headed towards us here down this road here. Warren Buffett's out there. He wants to put his 2 cents in. He says the U.S. bank deposits are safe, and the government would backstop all of them if necessary. Hey, Warren, the banks are broke, and so is the government. So how's the government going to backstop it? Oh, they're just going to print the money? Okay, so they can print unlimited amounts of money? Okay, Warren said they can print unlimited amounts of money, so therefore bank deposits are safe. The government would never let these banks fail. Okay, so they can print unlimited amounts of money for the banks, but are they going to pay off your mortgage? Are they going to pay my mortgage? Are they going to pay off your car loan? Are they going to pay off your credit card bill? No, that would be silly. I have to let you in on something. Warren Buffett's not really in my garage, but what he said is crazy. So I wanted to have an imaginary conversation with him, because that's kind of what I would say if he was in front of me. I would ask him, why would he say something so crazy? Why is he saying this? Buffett says U.S. bank deposits are safe and the government would backstop all of them if necessary. Maybe he's right. Please let me know what you think down in the comments, people. Thanks for being here. Big love. Keep stacking. Bye for now, and peace.